Welcome back, everybody. Happy Thursday to you. September 5th already. Boy, or the 5th of the month here. Monday through Friday, 7:30 a.m. Eastern Time. We start with our morning prep. We're talking crude oil futures. I'm here in Los Angeles. I got my screens open. I've got my partner in crime, Marty Errico, with me. He's in New York City at the NYMEX Exchange. Today we're going from the screen to the trading floor today with your very powerful morning prep for crude oil and natural gas futures. Once again, my name is Joseph. I run a live trade room every day over at SchoolOfTrade.com. Check us out. We offer a free trial right on the website. You'll see it's pretty easy to find. Go ahead and sign up for the free trial. You can get an invitation to come attend this call every single morning as part of your free trial. You can also go over to TradersAudio.com. Check out Marty and his partner Jeffrey over at Traders Audio. They do a great job every morning at 8:50 a.m. Eastern Time. Head over to TradersAudio.com and listen into them. They broadcast every morning live from the NYMEX Exchange. Getting started here this morning. Again, my name is Joseph. Welcome aboard. I'm a technical analyst, which means I'm looking at charts, and those charts are going to start with a slower time frame, move all the way down to a faster time frame. I'll anticipate the direction at the open, because if I can anticipate direction at the open, well, then I know I've got those high percentage trading opportunities waiting for me as early as 8 a.m. Eastern Time this morning. It's very important we understand, guys, this technical approach means I'm going to use multiple time frames. Slow time frame tells me the last few weeks, the last few days. Then I'll move down to analyzing what's happened the past few hours, specifically what's happened overnight and what's coming out of London, right? What news is coming out of London? What technicals are we seeing coming out of London? And then with that information, I will anticipate the direction at the open. I know if I can anticipate direction at the open, nothing's guaranteed, of course, but with the direction at the open, using major support and resistance levels I'm going to show you here in a few moments, we're going to find some great opportunities to trade shortly after 8 a.m. Eastern Time this morning. Now, I'm looking at charts. Once I'm done looking at charts, then we have the meat and potatoes of today's call. Now we have the pit analysis brought to you directly from the NYMEX Exchange. You've got my much better looking half, Marty Errico, waiting in the wings here, waiting to give us his pit analysis this morning. We're analyzing market direction, intermarket divergence, market internals, those always important option prices, and those sometimes confusing those pit session trading levels. So make sure you focus in on those pit session trading levels. He's going to talk about that last this morning. And remember, he'll be talking about the divergence between crude oil, RBOB gasoline, heating oil, and Brent crude futures. So we had a really great, powerful look into what's happening in the trading floor this morning, courtesy of Mr. Marty Errico. All righty. You've heard enough out of me here. Let's grab some charts. Let's grab some news today. Before we grab a single chart each morning, my plan is always the same. I'm going to begin by looking at the outlook today, and we'll start that with our news worksheet. I first need to know what's in the schedule today. What's happening today, right? What is the overall environment that we're seeing out there right now? I'm going to head over to sidewaysmarkets.com, and I've got my morning prep posted for you guys ahead of time. And, of course, we look at what's happening out of London. News coming out of London this morning is nothing but bullish. And, of course, we've got September's FOMC meeting on September 17th. We know that this Friday's non-farm payroll number is going to be on everyone's radar. And today we are fortunate enough to have four different news events that are going to directly impact Friday's non-farm payroll report. And what impacts Friday's non-farm payrolls is going to impact the September 17th FOMC meeting. Why does everybody care about the FOMC meeting this September? Because it's going to give us major clues into what is going to happen for Fed tapering as we go into 2014. This is very, very important to gold traders, to euro traders, S&P traders. Boy, the list goes on. If the Fed begins tapering, that changes everyone's attitude for the future as far as how they're going to trade long term. So we know that today's news is going to be important, right? Today's news will impact Friday's news. Friday's news will impact the 17th of the month's news. Looking at the focal points this morning here again, Looking at what's happening around the world today. The G20 meeting begins in Russia. If you remember, there's been a little bit of a soap opera building right ahead of this G20 meeting in Russia. Remember, Russia has recently teamed up with China, basically to take the side of Syria in this whole soap opera that's developing with Syria. While the U.S., while President Obama is building political support around the world from other parties in the area, we know, of course, that Russia has kind of taken that outsider's viewpoint of this whole thing. The attitude between Russia and the United States, it's always been like that. It's always been a little bit, kid brother, kind of poking back and forth. So we know this G20 summit in Russia, boy, could it be scripted any better? Right? Could they have even scripted this any better? It's like two Super Bowl teams meeting in the playoffs before they go to the Super Bowl, right? We know this is going to be an important G20 summit meeting because of all the political soap opera that's been building. Confidence building this morning coming out of the EU. We've heard a lot of recent positive news coming out of the EU, specifically here seeing very strong bond sales in Spain. Now, bond sales are really important because, remember, yields rise when a government needs to make their bonds more attractive, right? If I want you to buy my bonds, I need to make those yields very high, right? Because why would you want to buy junk bonds? If I've got bad debt as a country, right, as an economy, if the central bank in Spain, which of course is the ECB, if they're concerned that people may not want to buy their bonds, they're going to increase their yields. Well, they've seen the lowest yields in 2010. And they're having a record number of 5- and 10-year bond sales. That means that the analysts in Europe clearly are giving guidance that buying Spanish bonds is a good investment. Very interesting. All of this is going to start to build into the U.S. here now today. The reason why we're looking at what's happening out of London is because that's going to now be on the front page of the newspaper when the U.S. traders open their charts today. So remember, as of 8 o'clock this morning, this is what the U.S. traders are going to be thinking about, right? This is what they're going to be looking at today. And this is going to result in them making educated decisions. We've got central bank meetings coming out of the Bank of England and the ECB this week. We saw very strong U.S. auto sales yesterday, and the same goes for Europe. Europe also seeing very strong auto sales. So you can see a lot of positive news coming out here, end of the summer into the fall. Be very interesting to see what happens from non-farm payrolls on Friday. Again, we're looking at the September Fed meeting, September 17th, and of course Friday is non-farm payroll Friday, which is highly anticipated. Looking at today's news, we have 8:15 ADP employment, 8:30 jobless claims, 10 o'clock factory orders, 10:30 we got nat gas inventories, and 11 o'clock, we got crude oil inventories. Boy, jam-packed with lots of important news today. Now remember, this is a shortened week we're dealing with here this week. So this shortened week, we've got to remember, things that would normally be on Wednesday have been pushed back to Thursday. You can see that's where we get the that's where we get the crude oil inventory report at 11 o'clock this morning. You've got your nat gas report at 10:30. That's standard operating procedure. Factory orders again, ISM at 10 o'clock. We've got Red Star News at 8:30 a.m. this morning. Be on the lookout for jobless claims. Jobless claims have been on our radar the past few weeks. We've seen some a little bit ticking higher in these jobless claims report. Remember, all of these news events are really going to weigh heavily on Friday's non-farm payroll report. We have news at 8:15. Red Star News at 8:30. Again, Red Star News means at 8:30, that's when we should see the best personality of the market this morning. We've got 10 o'clock news, 10:30 and 11. As you can see, this is going to keep us moving throughout the entire morning this morning. Moving forward here, we begin looking at some charts, right? Charts are posted there for you. I'll look at the live chart here on my computer, and let's begin with a 30-minute chart. I always like to include a time-based chart in my analysis. Now, kids, if you're following along at home, why do we care about time-based candlesticks? Because there's wisdom included in time-based candlesticks. The amount of time that is included with price is a very valuable, it's valuable information. Okay, Peter Stedelmeyer, the gentleman on the trading floor of the CBOT, trading 30-year bonds with market profile. Market profile, time and price. Volume analysis, time and price. There are so many examples, technical examples, of how traders will use price over a period of time. So we must include time in our analysis, at least a little bit, in my opinion. I like to use 4-hour, 60-minute, 30-minute, and 5-minute charts to analyze time. 5-minute charts are very effective for intraday traders. Now, I'm using my 30-minute chart because I want to consolidate a lot of this information and see the big picture. I always get students in my live trade room, the first question they ask is, Joe, how do I get this big picture thing I keep hearing everybody talking about? Everybody says trade with the trend. Trend is your friend. Everybody says follow the big picture. Follow the big picture. How do I find that? Well, use a slightly slower time frame. Look for the trend and look for the major support and major resistance. On this 30-minute chart, I can easily see now, first clue we see, trading range. We had a very typical trading range coming out of London overnight. We usually see about $1 move overnight, and that's pretty much what we got, just shy of $1 move, 91 cents. So whenever we see that dollar move, we expect to see a relatively decent volatility type of day today. Whenever we see a very wide range, that gets kicked up a couple notches. If the range is really narrow, right? If the range was really narrow coming out of London, if we had a 50-cent range, then that would tell me that we should expect some range-bound trading this morning. As you can see, I'm using what's happened overnight to project what's likely to happen in the future. We started by looking at the news overnight. Now we're looking at the charts that are coming out overnight. And again, we can see this $1 move tells me, yes, we should see some volatility today. But let's dig in. Where is that range occurring? It's occurring right in the middle of yesterday's range. Previous low of day, 106.77. Previous high of day, 108.41. Guys, we are right in the middle of that range. What does that tell me? Well, before I say what it tells me, think about the scenarios. If we were trading at the previous high of day, okay, imagine for a second now, we open in the U.S. at the highs. Well, I'll tell you, it's not bearish, I'll tell you that much, right? That would be a bullish clue. Now, scenario 2. What if we opened up in the U.S. and trading was down at the previous low of day? Yeah, right, exactly. We know it's not bullish. It's bearish. So here we are. We're not at the highs. We're not at the lows. We're hanging out in the middle. So we know that when we're in the middle of the range going into the U.S. opening bell, we're not bullish. We're not bearish. Nobody has any clear control over the price right now, and that's a very big clue. Oftentimes, if we see higher highs right off the bat, we know we're buying this morning. Okay? Opposite side, if we're going lower, we're selling this morning. Here we are, though, right now, unfortunately, right in the middle. So the 30-minute chart tells me I have resistance overhead at the previous high of day. I've got two of them, 108.83 and 108.41. Remember, I will use that as resistance first, and then as we go higher, it will be used as support, right? We call that an inflection point or a reversal line, right? What is resistance becomes support. Same thing is true to the downside. I will use the previous low of day as support. Once we get below the previous low, though, then I will use that support as resistance to get short. The most important clue we get from this 30-minute chart is inside the range from yesterday. That tells me I do not have enough information yet to make an educated decision based on trend. The trend is my friend, guys. I'm trying to figure out what is this trend telling me right now, because if I can figure it out, I can trade in the direction of that trend, and I can usually make a lot more money when I follow the trend. Now, here we have our anchor chart number 1. This is my slowest of all time frames that I'm going to use. Again, you'll notice now this is a tick chart. This is not going to be a time-based chart. The reason I use a tick chart for this is because my entry charts are tick charts, and so I'm going to use the fractals, right, to move on down. Now here we are, 5400 tick chart. You can see here, very clear to see, we are trading in between this 108.23 and 107.14. Boy, yesterday morning trading crude, we tried to get below that 107.14, and you might remember me saying be careful trading short directly into that 107.14. This does not change this morning either. We must continue to respect this 107.14 area. We saw it literally 107.30-ish yesterday started becoming an issue. 107.14, though, definitely will be on our radar again. We will continue to sell short. As you can see, the long-term trend here is clearly down on this anchor chart. So it looks like we are in the middle of overnight trading on the 30-minute chart. On the anchor chart here now, we've got a downward trend. I've got to keep an eye out for that 107.14. We keep moving here as we go. It's a little bit slower, actually a little bit faster here. We move to a little bit faster time frame now. We see a lot of the same stuff here. I'm going to go ahead and add in 106.52 and 105.97. If you remember, traders, yesterday morning I was hunting for that 106.52 on that short on crude in our trade room yesterday morning. We didn't get there yesterday. Maybe today will be the day. 106.52, that's going to be my target here for the shorts here, 106.52. Now remember, we got this trend line here overhead. That trend line you see overhead will continue to be great resistance. Don't be shy about selling this area of 108.23. Remember, the long-term trend being down, I will sell with a wave pattern going short, or I'll wait for price to try to rise, bounce off the trend line, start to move lower, and then I've got you right where I want you, sellers. I'm going to be selling short at the 108.23 just the same. I don't care how I get into it. All I care about is I'm trying to find the long-term trend and trade with it. Here we are now. Final chart for me this morning. I've got 107.80 and 108.05. Could this be any easier of a scenario to paint the picture for a short? There it is, guys. There's my spots. That's where I'm looking for those shorts here now. I've got my 107.80, my 108.85, sorry, 108.05. I've got 108.39. So these are my hot spots here this morning. Right now I have targets at 107.41 and 107.04. On the way down to the lows, 106.80 and 106.20. Those are my targets. The ones in white will be removed if we make a new higher high. If we make a new higher high, you got to go out and recalculate the ones in white. All right, guys? So be aware, be aware. Again, targets below me, 107.41, 107.04. Unless we make a new higher high, then we scratch those out and we go back to the drawing board. I will leave the 106.80 and the 106.20 on here, though, and I'm looking for shorts in either of these red boxes here this morning. Remember, guys, don't predict. Wait for price to react. Once it starts going in my direction lower, I'm then using my wave patterns, my entry patterns to get into short here and use those profit targets. All right, guys, that's the charts I'm looking at this morning. But you know what? I'm only one man's opinion. I'm anxious to see hear what Marty's seeing and feeling on the trading floor this morning. Let's touch base here now with my good friend, my partner in crime here, a fellow grad at School of Trade, Mr. Marty Errico. Marty, how are we doing this morning? Great to have you back here once again. Happy Thursday to you. Is everybody excited about non-farm payrolls tomorrow? What are you seeing out there?
Yeah, we got to get through today first. I mean, there's a lot of domestic data that's due out today that's going to probably be just as big as the non-farm payroll tomorrow, right? This is our last piece of domestic data that we get, the jobless claims and the non-farm payroll right before the September Fed meeting. So they're probably going to be basing their language on tapering, you know, in respect to these numbers that are coming out today and tomorrow. So it's quite important to, you know, keep an eye and watch those numbers, right? It's going to be big today. All right, so you saw we rallied, kind of just caught a little bit of a bid in the overnight session. Reason being is because we had API numbers out last night. Getting them up on the screen. Still loading. Okay, so APIs, oh, there you go. APIs come out, and they show a little bit of a draw, right? Nice draw in crude, about 4.2 million, right? Cushing shows a draw of about 1.9 million, so these are significant, right, for crude to rally, right? And we did see a little bit of a bullish reaction, but I'm guessing at 8 o'clock when traders come to their desk about right now, they'll see that we did have a little bit of a draw on the API, so we could possibly rally. We'll look at the charts in just a sec here, as JJ just was looking at them. I agree with him on some of those high-end resistance levels, right? 108.75. Monday's high, Friday's high, big resistance for the week, so we're going to pay attention to that level, but we'll get to that in just a second. Gasoline distillate showed a draw as well, minor draws in the gasoline, minor draws in the distillates here. So you can see kind of a mixed report, but overall bullish for crude, right? A little bearish for products, but still a draw is a draw, so it's not that bearish. Again, more of a sideways reaction. Expectations, these are the latest forecasts out of Platts and IMEX and Reuters for your crude EIA, DOE numbers Crude, we're looking for a draw of 1.3 million. Gasoline, 315,000 barrel draw. Distillates are looking for a build, 600,000. So the refinery utilization rate, I believe they're looking for about 0.25%, but that will be changed. Again, we'll give you guys those latest revisions on the cast. But that is what we're looking at as far as API last night and the forecast for today's numbers. We also have natural gas numbers today. We're looking for 55 BCF on that reading as well. That's going to be at this is at 10:30. Crude is at 11 o'clock, by the way. So at 10:30, we're going to be looking for 55 BCF. And anything above 55 will be selling. Anything below 55 will be buying. And really, any type of draw will be buying as well. So anything below 55 or any type of negative draw, we'll certainly try to buy that up. Looking over into the crude real quick, as you can look with me, we have right now just kind of crude in the middle of this wedge, right? And we have that resistance up above that JJ was speaking about, right? You have Friday and Monday's high. We have that 108.75 to 109 even. And that's where I think we can possibly trade up to, right, before news. After a little bit of a bid, we'll trade up to these highs, and we'll probably look to see how the news comes out, see how we react around these high prints. Now, if we start rejecting them right away after getting a draw in inventories, then that has to tell you something. That tells you we might have to sell this thing and trade within this range. If inventories come out with a significant draw like the prices, right, come with 4 million barrel draw, it could be safe to say that we can rally, but you want to have an air of some caution. You know, there's this G20 summit going on, right? We have the congressional leaders on Capitol Hill in their little committee-style rooms, and they're talking about what they're going to do in Syria. So any type of things that hit the wire can move. But keep in mind, we have a lot of news today. Just want to mention ECB, right, and Great Britain. They both left rates unchanged. We have Draghi getting on the microphone at 8:30, so we're going to see a lot of reactions coming in at 8:30. So you're going to see very mixed readings, right? We're going to have we're going to have ADP at 8:15. We're going to have claims at 8:30, and then we're going to have Draghi on the microphone. So there's going to be a lot of chatter, a lot of movement associated with the trade at that time, and then we're going to be coming in the opening bell at 9 o'clock. So it's going to be very mixed, and things might not be lining up right away, but they will line up after we get some numbers out. Natural gas, real quickly before we go on. At natural gas, we're in this range, 365 to 370. We're selling 370s. We're buying 365s. That was the plan all week. It's been a very efficient plan. We're going to eventually break out of this range. So if we get a draw below 55 or anything below 55 BCF, we're buying pullbacks above 370 to get us up to 377.10. That's the target. If we get a build above 55 BCF, we're selling short, right, below 365. And we're looking for 362. The bottom of this channel to be a target. Simple as that. That's how easy natural gas is today. Looking across the board, we have a little bit of a mixed energy complex here, right? Crude, Brent, both trading higher this morning, but we have RBOB actually lagging just a bit, right? In the wind tails, just lagging a little bit of a sideways downtick, and heating oil trading higher. Right now, all your spreads are bullish. That's why I'm thinking we can get up to that 108.75, right? Spreads are bullish, volatility is looking firm, and also we are coming across big numbers and big news, and after looking at APIs rather bullish, that gives us an indication that we could trade a little bit higher. Right now, we don't have much of a risk-on or risk-off sentiment. Everything was flat. I made this sheet before we had the ECB come out with their decision on rates. Everything was flat ahead of that. Now we see the dollar shifting just a bit, and the dollar's now trading at about 82.24. Just rallied about close to maybe 20 ticks, so maybe the dollar's a little bit higher, euro's a little bit lower, right? So we're seeing that risk-on sentiment to the market, but right now they're flat ahead of all these numbers. They're going to move around, though, so I feel we will have a decent risk-on sentiment today, but don't pay much attention to this as of right now because I made this sheet before the numbers came out. So we have forecasts for the numbers, right? We have everything we need. Let's just take a look at some levels now, right? These were levels from yesterday, right? Levels from yesterday. We have pit session high from yesterday, right? Pit session high from yesterday, 108.14. The low was at 106.77. Close settlement number was 107.20, which we're trading above at the moment, or above daily pivot as well. Daily pivot's going to be 107.37. Resistance up above, 107.97. 108.75. Yes, it's the R2 resistance, and it's also the high from Friday and Monday. So going to be some resistance to break through that 108.75. So I'm really focused on that, laser beam focus. And 110.11 will be a target if we happen to get above the 109, 110 will be that target if we happen to get above those 109s. Support down below, we got 106.60, 106 even, and 104.63. Open interest has been just falling just a bit, again squeezing out some shorts, 294,736. Again, open interest a little bit lower by about 6,000, squeezing out some shorts. Implied volatility continues to rise, 30%, healthy market, big ranges. And that's really what we can expect, I believe, for today. Is, as I mentioned, last piece of domestic data before FOMC in September's meeting. So they're going to be beta logic on tapering from these numbers today. Natural gas, high from yesterday, 368.60, low 364 even. Closing settlement number 368.40. Daily pivot 367 even. Resistance 370 even, 371.60 and 376.20, right? 376.20 and 377.10 will be the targets if we happen to get a draw and start to buy pullbacks above 370. If we get a larger than expected build, then we're selling all the way down to these S levels. 365.40 is going to be our first sale. Our second sale will be 362.40, and our last target will be around 357.80, which is the lower end of the channel. Open interest has been falling just a bit, 206,721. Implied volatility about 32%. Nice, healthy market. We've been seeing some decent ranges, but again, it's been a rather tight range, but it's been consistent, right? That's what we're trying to do. We're trying to make money, and we want to see consistency. So it's been a consistent range. Volatility has been big. Gamma's been on the offer. A lot of backtailing comes in with these options in the pit. So they've been starting to really kind of like this range, but it's all positioned with these numbers. If these numbers come out bullish, then we're going to be buying above 370. If not, we're selling below 365, and we'll get out of this 5-cent range that we've been in. All right? That's what I'm looking at here, guys. Again, remember, we have numbers today, so take a look at the forecast there. Again, the latest revisions will be out before the number. I'll give them out to you guys, and that's really about it. We'll hand it back over to JJ as we have a big day today.
That's right, baby. We got kids going back to school this week. Big days for them.
Yeah, that too.
Right? That's right. It's a really big day for them. Remember how big that was for you when you were a kid going back to school, man? That was the biggest thing in the world. So we definitely got a big day here though today, guys. Got a big day in front of us.
Rosh Hashanah too today.
That's right.
Rosh Hashanah as well. You know,
I should have wished all of our Jewish listeners a happy holiday here, because it's a very, very important holiday. Probably one of the most important of the year, right? Guys, it's a big day in front of us. We got a lot of stuff talking about here this morning, guys. Thank you so much for being here. Marty, thank you as always for being such a great partner on this here this morning. Directly from the NYMEX Exchange, guys, that was Marty Errico. My name is Joseph James. I want to thank you guys so much for coming in and joining us here every day, 7:30 a.m. Eastern Time. And, of course, we're going to do it all again here one more time tomorrow, guys. Come out and see us, 7:30 a.m., Monday through Friday for our screen-to-floor morning prep. Would you like to get an invite to this broadcast? Would you like to have a special invite? Shoot us an email. JJ at School of Trade, Marty at Traders Audio. Let us know what you like. Let us know what you dislike. Come out and see us. We get a special invitation for you guys to be part of the live broadcast. You can ask questions. Don't forget, there's a free trial over at schooloftrade.com as well as over at tradersaudio.com. Check them out. We'll catch you guys here same time, same place tomorrow. You guys be good today out there. 8:30 Red Star News. We're going all the way through to 11 o'clock inventories here this morning ahead of that non-farm payroll report tomorrow morning at 8:30. Don't forget to learn it so you can earn it. We'll see you guys in the trade room today. Adios, amigos. Bye-bye for now.